Good day, all. Ira Epstein with your metal market wrap-up. And this wrap-up is for the evening of Tuesday. And we're sitting here now at the 28th of June, 2022, 5:20 p.m. Central Time. So we have an interesting day. Copper tried to bounce today off the idea that China was changing its zero tolerance policy up a bit. Still the zero tolerance, but they're going to let foreigners in and half the quarantine time. Okay. If you think that's a big change, fine. I didn't buy that from the beginning, and copper didn't either. It just sort of laid down, and it's not doing too much. Dollar has been stronger as there's still more talk from central banks, how much they're going to have to lower interest rates. We saw that with Ms. Lagarde today. And gold market, it's staying now into an area that's getting oversold. So you got to be a bit careful down here as far as I'm concerned. In the energy complex, we're still sitting near 118, as you can see in the Brent, and 111.80 sitting here in the WTI. Gasoline did drop back a little bit, but I don't think it's going to matter that much. And natural gas, I'm waiting for that first hot day where you're going to get that boost in the market. Bonds and notes, I think the market's now going into hibernation, actually, as we get ready for the July 4th holiday. Now, remember, that's going to be Monday. You get into the holiday weekend type trading. A lot of traders will leave the market starting Thursday. Friday will be just a dead volume day, in my opinion. I've seen this over and over. Traders start taking off. When we look at the S&P for the week now, we're down about 2.25%. You can see how the market's slipping away. I don't understand why so many people keep saying, oh, the market's down enough where it's fishing for a bottom. I just don't see it. Not at all. I don't know what they're seeing. In the S&P 500 index, we've had a bear market bounce. That's the way to label this. Market made a low, had a week and a half of rallying, and now it's running into resistance. You have a pattern of a lower low, and now with an outside day, down, a big one actually. You know, this morning, as we were getting ready to do the morning flash update this morning when I was sitting here, at one point I'm looking at the stock market up in the Dow, 400 points, going, I don't understand why this market is up that much. I was looking all over, I couldn't find it. Before I knew it, the market was down dramatically. So you have a 1,000-point range in the Dow today. Where do you see the S&P? The range for the day, let's see if I can get this for you, because it is worth saying. Here we go. The range for the day, 39.50.75 to 38.21. So we're sitting here with, what, a 154-point range? Whoa! I mean, that's not a small range, my friends. That is one heck of a big range, as you can see. And often that says that the market's run into some resistance. So where might that resistance point be, I'm asking myself. So as I'm looking at the chart, look at the 18-day average of closes. Let me give you what this market has done. You had Bollinger Bands, and I'll show them to you in a minute. And that's why Bollinger Bands are so darn important. The market came down, was running with them, backed away. Here's the Bollinger Bands. Okay? So now you've got the 200-day, the 100, the 18. You hit the bands, you bounce away from them, and what do I call the 18-day average? The line in the sand. But what is so important and what set this whole thing up was right here. Because as you start looking at what these markets were trying to get done, I'm not going to be able to get that here. Right through this area, you were trying to embed, you lose it, and you go back to the 18-day average. It's a pattern you're going to see over and over in the markets. Here you got oversold. All you did is go back to the line in the sand, the 18-day average. You're not in a trend. You broke the downtrend, you rallied to the 18-day average, and you still have the broken trend. So overall, the bias is down, but you're not trending per se. Why? To get a downtrend, you need lower highs, lower lows. Any way you want to cut it, you have to have that pattern. You don't. You have a pattern that ended a downtrend, had a bounce, and the market is fishing for whatever new is going to happen. I say the same thing in the Dow. The market came down. Look at the size of the range today. It's absolutely monstrous in its size. It's not going to let me move it. It's going to move this, unfortunately. I just don't see a thing to do on that. In the Russell, oversold to the 18-day average. So every stock index, let's get to them, every one of them went back to the 18-day average of closes, and they all ran out of their momentum against it. And they just sort of went, oh, I've exhausted myself. I ended a big break. I've gotten back up. Now I'm looking for new direction. And that's what I think they're all saying here. each and every one of them against that 18-day average of closes. In the VIX, for those of you that get my morning subscriber video, what was I saying? I said, you're at the zone that if you're going to poke through here in a hard way, maybe you can get back to the 200-day average, but boy, you're going to have to break through those old lows. I don't see that. That's just what I was saying. It could happen, but I don't see it, and I still don't. I think you're just caught in the holiday trade at this point in time. Now, in the bond market, it's sort of like what the stock indices did. You had come down, you had an embedded reading that you eventually lost right here. It's when the red line got back over 20 on a closing basis. It set up your test with the Bollinger Band of the 18-day average, and that's what you're fishing at now. You've got a small uptrend. The bias is up tonight because you're over that 18-day average. To get the market back into the bear trend, I'll give you the pattern. Take out the lows of today, Tuesday, at 134.8, close lower. That'll put you right back into the downtrend. But I got to wait and see if that's going to occur. In the 30-year bond, if you take a look at what this market, let's go actually to the next chart. That's what we were just looking at. If you go, I'm hitting the wrong buttons here. Here we go. Brand new tool. I'm still not used to it. If we come here, is it going to let me go? Sometimes it will give me, there it is, yes. Okay. So let's get to today, Tuesday. The high of today was 107.01, right through here. If we take a look tonight, we're at 160.30.5. You want to get back over the highs of Tuesday. If you can do that and then close lower, you reestablish the downtrend. That would give you the lower highs and probably set you up with the lower lows as well. Got to get to it. So what do we have right here? Both the bonds and the notes are sitting in a zone here where the market's trading against the 18-day average, trying to establish an uptrend. I won't buy into an uptrend. The Fed's going to be your enemy all the way through this. I'm looking for sell signals, not buy signals. If I miss it, c'est la vie. You buy them and you'll say, Ira, you missed the whole thing. You didn't even realize what a bull market bonds and notes were on the futures they were running. Okay, enjoy yourself. In the 10-year, in the dollar index, all you did on the correction, because it's been in a big uptrend, is fall back to the 18-day average. Now, let me give you the pro and the con. If the market takes out 103.42, that's going to look bad on the chart. You could keep not only the lower highs, lower lows, but then you're under the 18-day average, and you could be setting up for a breakdown here. If it stays like this, it's marking time because with the trend down on the swing line and the bias up, you have absolutely nothing going on. In the eurocurrency, you'd been in a downtrend. The Bollinger Band was right here. Market moved all the way sideways to the 18-day average and petering out on you. No trend in hand in this market either. British pound is still in a downtrend. The market stalled, but it reestablished itself. You'd have to get up and close over this 112, let's call it 123.41, not 112, 123.41 in order for me to say, nah, the market doesn't want to keep going down. Barring that, there is no reason you can't be headed to the lower Bollinger Band until that occurs. In Bitcoin, you're still very much in the bear camp in the market. You're at 203. The sell zone was back in here in the $21,000 level. It's broken quite a bit. I've had traders going short this market, and I've just been looking at it saying, are we going to get a washout under all this where it catches fire to the downside? I don't know. I know that you're looking at a lot of big problems for a lot of the coin exchanges and a lot of people that were lending money against Bitcoins. They ran out of cash. There's no other way to say it. This big break really hurt their financial reserves. Read about it in Barron's, read about it in Bloomberg, Reuters. They're all carrying stories about what has broken this market and why the market's staying under pressure. This is not out of the woods by a long shot. In Brent versus WTI Oil, you can see how it keeps coming up. Now, we keep hearing stories that there just isn't the production capability out of the United Arab Emirates, UAE, to give you more than 150,000 additional barrels a day, if they can do that. That's according to French President Macron. Then you have the Saudis wondering, where are we? They're meeting Thursday now, the OPEC meeting. But if you saw the technical committee coming out, they have already told you that there is a deficit. In other words, we heard OPEC Plus was going to increase production. They're behind 560,000 barrels a day. They can't get the production up or are not willing to get the production up. It's a combination of everything. Libya in a problem, Ecuador in a problem. These are marginal producers that have gotten even more marginal. Then you get the Russian situation. Everybody's trying to figure out in G7 how they can get the European Union to accept the fact of price caps. Now, those price caps will benefit who? China and India. Why? Because they'll be able to take some of that money and some of the oil that Russia only has them as big clients. That's all that they have left. Other than their own satellite countries, there's no big clients left. Those countries are going to be able to dictate the terms. I warned you this was coming. You watch how it is. There's already discounts of $35 to $75 a barrel going on to sell oil into India and Russia at this point off of the regular posted price. Why? Well, it's pretty evident why. You don't have only two clients that you can sell it to. Then the stupidity that we keep talking to Iran. So let me think. Iran's watchdog, the Nuclear Commission, they can't even get in and keep a camera running. And we, the United States, are going to get into talks to get Iranian oil on the market. And for that, we're going to trust Iran to not develop their nuclear weapons, not create havoc. What kind of idiocy is the Biden administration full of? Idiots. There's no other word. Idiots, okay? You can't go down that road. That is the worst road you can go down, all right? You're taking the terrorist organization, if you don't label their Revolutionary Guard terrorists as President Trump did, what are they? These are the goodwill people of the world? Why don't you go and talk to any of the Arab countries and see just how much havoc is being caused there? Now you think that for a year or so, that's all this is left on this treaty. It's been running out. That the Iranians are going to play good? They're going to lie. They're going to do whatever they want anyways. We, as a world, shouldn't be this desperate. WTI, looking up here, getting to the 18-day average of closes. That's about where I think the battle will shape up right now. Gasoline. I was surprised that gasoline even fell today right in front of the 4th of July. We'll see what happens. The market is still sitting here only at 382. It's well off these highs in the $4 range. You haven't seen it at the gas pumps, though, right? And you know why? It's so simple. It's called greed. You heard me. Greed. Hey, you want to drive somewhere, see a family? You want to take your trip right now? How many people are going to hit it? How many millions of Americans? And I should lower, if I'm the gas station guy, the gasoline at the biggest driving time? Let me think about that. I'm fighting inflation everywhere. I don't get rich running a gas station, and I'm going to lower my price. Isn't going to happen in front of the 4th of July. That's my own prediction. Afterwards, yeah, there'll be some give on that. Natural gas, you need the first hot weather. Haven't had it. But when it comes, you'll lose the embedded reading. That's why embedded readings are so important, and they'll tell you what's going to happen. Now, where's the battle? The battle's right here. It's the 100-day average in the lower band. That combination is a beautiful combination. When you have an embedded reading, you watch, because that's what the market hangs around. Either you get another leg that's going to be big down, and you will go down then to 547 if you get that leg, or lose the embedded reading and you're back up to the 760s, 750s, probably one way or the other. You've got to learn how to work with the Bollinger Band, with the slow stochastic. It's your edge. You're ahead of the crowd by a lot. Watch this, pay attention, get the course, and get the edge. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.